start recording. So yeah, I'm going to be looking at liquidity, imbalance, and inducement. And for one, this is the most important part of um the way I trade, right? The most important part. So what's about liquidity is important. Okay, so don't be in doubt about liquidity. It's the ultimate driver of what moves the market. Nothing else traps traders as much as lack of understanding of what liquidity is and what inducement is. So why is liquidity important? It's important because it tells us it helps us identify fake moves in the market that are orchestrated to trap traders in the wrong direction. Okay, so, and there are different types. But for the focus of this module, we'll focus on transactional liquidity, which is usually the liquidity that is taken after a correctional move, or a structural liquidity, which is liquidity for continuation, or inducement liquidity, which is liquidity for expansion. So all of this liquidity play a very important role. All this liquidity play a very important role in how the market works. Okay, so all this liquidity have been explained in the bootcamp before now, and you can refer to them for more information. However, I'm going to go over them very quickly, right? So let's start with the structural liquidity. Now, structural liquidity occurs because loves the extreme. Price likes to go to the extreme of anything in the market. Okay, and usually when we say there's structural liquidity, when price goes to raid the last low before the main low, or the last I before the main I. Okay, I'm going to explain that. And remember that structural liquidity equals continuation. Okay, structural liquidity equals continuation. See, structural continuation. So, for example, you can have something like this where price have been going up, going all the way up, going all the way up, going all the way up. Then you start seeing price coming all the way down. Now, in this scenario, this level is our structural liquidity. It is the last I before this main I. Okay, so when price comes and takes out this guy, our structural liquidity, what happens? We have continuation of the sell bias. So that's structural liquidity. Okay, in a buy scenario, you can have something like this, this. And you have this, you have this, you have this, you have this. The price forms something like this and starts to go higher. Now, where's our structural liquidity? This is our structural liquidity. Why? It is the last low before this main low. So price can decide to come all the way down to take out this guy. And what is structural liquidity for? Continuation. So we'll be our target this next time. Okay. Very guys. Okay, so let's get back to it. So this is our structural liquidity. Now for transactional liquidity, usually when price starts to go in a direction, you usually notice that price would retrace after breaking new highs in a bullish market. For example, price after breaking this high, you see price retrace a little bit and then goes up. Again, retraces, goes up. So every time this happens, that is what we call transactional liquidity. It's the liquidity for correction. Price is trying to retrace, liquidity for retracement. So you see price takes the high, it's going to retrace a little bit, takes the high, retraces, takes the high, retraces, and on and on and on like that. Why for inducement liquidity? What we focus on for inducement liquidity is basically our MSU setup. Now, in an MSU setup, inducement is for expansion. So it could either be for continuation or for trend reversal. So now for continuation in this scenario, see what I drew here. Here we had price takes the low, creates a new low, and then induces the high. Why? Because at this point, a lot of people that trade SMC, they are trying to buy this trade at this level, right? So because this is break of structure, and then they expect price to come back here and then go higher. So they're trying to buy the trade here, and what happens? We take them out. Okay. It traces and then price continues in the usual trend. Same thing here in this scenario. The new high was formed, the low reduced. Okay. Low formed, price comes back, induced this high. Structural liquidity. Okay. So all of this liquidity actually work together one way or the other, right? They all work together one way or the other. And then we are going to get to the root of all of this very shortly. Okay. So I already mentioned about structural liquidity, structural rate of the last low before the main low, rate of the last high before the main high. Now, inducement liquidity, this is the most important part of our trading. And I'm going to spend a little bit of time explaining this. Now, we talk about MSU, and from MSU, we talk about the fact that when price starts to come lower this way, right? We have what we call a fake break of structure. This is a fake break of structure. And then we have an inducement. So the first one, this level, price breaks this level, it's a fake break of structure. Comes back to take away this high. This is the inducement. Now, at the same time, this level is not just an inducement. This level is also another fake break of structure. Why? Because price is going to continue selling all the way down, right? So we had faked that we are going to continue the buys because the first fake break of structure was this level, right? We try to break structure to tell people that we want to keep selling, and then people want to sell around this level, right? So they want to sell when price comes there, they want to start selling. But no, we take them out, we induce them. And immediately after inducing them, another set of guys believe, oh, this is the true break, or this is the break of structure. So they want to start buying at this level. And again, we take them all out. So from fake break of structure, inducement, you have another fake break of structure. So you can have something like this, fake break of structure, inducement into a zone right here. The price taps that zone and start to sell, right? If there's an important level at this area for buy continuation, price is going to tap and start to buy. So that would mean this is fake break of structure, inducement, slash fake break of structure, inducement number 2. So it means that for every time price induce a level, that level can either be a new fake break of structure or your true inducement. So how would you know? You would know depending on the area that price is. So like I said, the first for buy scenario, let's have this. So we can have this first level can be our fake break of structure. Then this would be inducement slash fake break of structure, right? Price is going to come all the way. Price can decide to induce this level again and then shut down, or just come all the way and keep going higher. What is going to determine if price is going to shut down from this level is if there is a sell zone from this area. If there's no sell zone, price is going to continue all the way up, meaning this is our true inducement and this is a true break of structure. I'll take that again because I know it's a bit could be a bit confusing. Now, this is what I mean. When price is going in a bullish market this way, right? Remember that in a bullish market, new highs are formed, the lows are induced. So price comes, induce the low, induce the low, right? What I'm saying is that this low is not only an inducement. As long as it's an inducement, it's also a fake break of structure, right? Why? Because we are faking that we want to start selling, while in fact, we are going to take all these guys out. So this is the first fake break of structure. This is also a fake break of structure, but it's an inducement also. So when price breaks this level, if there is no level to sell from here, price will only retrace and continue buying. But if there's a level to sell from here, this would be fake break of structure, inducement, taps the sell level and breakdown. And that's why this happens every time in the market. And I'm going to show you what I've just shown you now happens every time in the market. It's the reason why you see your trade hit a level and then you just get taken out like prematurely. You're wondering what's going on. It's because market is showing you its hand, it's trying to tell you what it's trying to do. Okay, so something like that. So let me take this off. I'm going to show you, for example, I'm going to show you something that happened today, right? Let me show you see this. Now see this cell, this particular cell right here. Let's see. The trade came off from this level. Now I'm going to use everything I've mentioned so far. So I'm going to try and go down to some weird time frames just to bring out my point. Now, on this level, right, where is our last low before the main low? This guy. This is our structural liquidity point. And why is it a good structural liquidity point? Because obviously, price has not mitigated a lot of these guys, right? This is the 50% of the week. Price has not mitigated it. So we have our structural liquidity. So let's draw this to the far side. Let's see if price reacted to it. Okay. Oh, not that one. Sorry, guys. It's this one. Thought as much. This one. Why? Sorry, I made a mistake. This is strong I. Took the low, took the I. So this is a strong I. So we should actually be selling from this level. Okay, sorry, lots. So this is our structural liquidity. And see what happens. So we tap into that level for sales. Now, for this sell, something very interesting happened. Now, see this level. Price is always giving you that hand that he wants to sell, right? So price at this zone, see what happens. So takes the eye, and now practically see what happens here. Price took this to this level. So we have fake break of structure, we have inducement, right? And then probably if you're an MSU trader, you start selling from this zone, right? You're selling all the way down, right? And suddenly price just induces the MSU. Oh, then you're like, oh, okay, this is the true break of structure. So you want to start buying. And then just at the point you start buying, price takes you out again to continue higher. Now, why did this happen? We're in a sell zone. And in a sell zone, what happens? This is the true fake break of structure. This is the inducement because all these are a single leg. I hope it makes sense. So price taps through inducement, what happens? We sold all the way down. Now, after selling the way down, where did we come to? You try to mark out this left right here. So you have this, price took the low, make the high. And that was why the first level that came, if you watch the news, when the news came out, price came to still within our MSU level right here, then tapped and then bought a little bit into this old MSU level, and then the market sold. Now, where did we come to? We came to induce this structural liquidity. This is the last low before this main low. Why is this a main low? It's a main low because price broke the high right here, broke the low. Okay. So this is our structural liquidity. So price came precisely to this level. Do you have to come to the 5 minutes to see this? No, not at all. This is actually an H4 gap level. Okay. An H4 gap level. As you can see, this is the H4 gap level. All right. So refine to M30. We have this big engulfing. Why is this engulfing important? It's important because it's a strong level. Remember, we said from our classes on structure that when when you're anticipating a retracement, you should anticipate retracement from strong levels that have broken structure and have their lows induced. So we have this guy here who has done marvelous work and also coincides with this level. And we are going to talk about this also very shortly. So this is an example in today's price action of what happened. All right, the same thing happened yesterday. Okay, I'm going to show you guys just right here. Right now, this level was I had this level marked the night before. I'll see this. Oh goodness, what's that? So we have this level, then we have this level. Now see what price does. First of all, we came very close to that level, right? We broke the low, right? And then we broke the high. Okay. Now, immediately this happens, what do you think traders want to do in this situation? Traders want to start buying from this level, right? Oh, we tapped the original level, and then oh, it's a strong level. Broken, take the low, take the high, then true break of structure, on and on. Oh, double breakouts, right? Then price comes all the way, induce everybody, takes them out, and then the review move continues. This is something to always anticipate. If you're not anticipating it, then the price is likely going to induce you. It's going to take you out. Right? This happens every time. That's why every time price is going to make a move, before price starts making that move, there's usually an inducement. It happened here too, the same day. Oh, sorry, not the same day, last week, I think last Friday. Now, see, price tapped into an important level right here, somewhere here on the daily, far, 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 far apart. So what happens? So what price gives us? Price comes, gives us this low, takes this low, and then the high. Now, a lot of folks would, oh, this is MSU, right? Price has taken the high, then takes the low. They won't start buying from here, right? Buying from all of these guys. But what happens? Price comes, induce that low, and then market continued higher. On M30, I think this is, sorry, on H4 rather. Price tab and H4 resistance right here, and the buys continue. So there is a bigger picture, okay? You always want to ask yourself, what is price trying to do? What is that thing I'm missing out of? Okay, so is this a fake BOS? This is an inducement, fake BOS, and then another inducement. So, like I said earlier, if you have a level where you want to sell from or buy from, for example, this level, what do you anticipate? You anticipate that price would come all the way, form an MSU this way, take the eye into that level, right? Right? Take all the guys out, comes back and do something like this. Why would you anticipate this? Now follow me. Where's our first fake break of structure? This is the fake break of structure, right? This is our inducement slash fake break of structure. Why is it slash fake break of structure? Because we are in a buy zone. If you are going to sell from here, your next place to take profits should be somewhere around this area. Why? Because market can decide to come all the way down and then decide to take you out again. So I think I need to write this out so I'm sure I'm not confusing anyone. Sorry, where's the text, but okay, got it. So this is inducement slash FUS, right? Why this is FUS. Okay, now inducement slash FUS right here. So when price comes back to this level, this one now becomes the new FUS. This becomes, sorry guys, FUS, okay? Again, this is now inducement slash FUS. So where's the true break? This is the true break. So it is when price comes back to this level, you're sure you want to take this trade. So two reasons to take this initial sell, right? You add MSU into the level. So it means that when you're looking for MSU, you can look for MSU into your zone or your area, or MSU away from that area. Okay. So I'll show you a few examples. Like this first example I showed, right? Price took the low, right here. Sorry, took the high right here, then came to take the low, and then the buy started. All right, it happens every time. See, same thing happened here. Let's see. So price is probably reacting from somewhere around this area. So what happens first? Price comes all the way. Okay, start deceiving people that you want to start buying, right? Deceiving all the folks. Well, I'm going to start buying. Then got to this level, then came all the way down. See, this is your classic MSU, right? Price took the high. Sorry, price took the low and then came to take the high. Then suddenly you see price comes, takes the low, takes the high, showing you that the true intent is to push price higher. And immediately it does that, induces the main low, and then price starts to push higher. That is what price does all the time. Price would always show you its hand. You want to do something, it would show you how it wants to do it. Same thing happened here, right? So you had your decent MSU, you're happy you got your MSU. So the price takes the low, takes the high, come into the sell zone, sorry, the buy zone, and then starts to buy. So it will give you MSU into your zone as an hint that, oh, this is what I want to do. I really want to do this. And what's that MSU doing? That MSU is tricking people, right? For example, price has taken the low right here, and then takes the high. So break of structure. So when price is coming back, what do traders want to do? Most traders want to start selling from here, right? And then you start selling, and suddenly you see that, oh, price hooks you, takes you out. Why? You lost track of the fact that there is an area here that price is reacting to. Okay, so plus the understanding of what's it called? of structure and storyline, which we will to put all of these things together. It happens every time. Okay, this level, right? Let's see. So price take the high and then took the low right here. Now watch. Takes the low again, takes the high again. Now, when price retrace, what is this level? This is the last low before the main low, right? So this is our structural liquidity. Price takes structural liquidity, starts to push higher. And oh, I'm already thinking, oh, now that means the buyer started, right? I'm thinking the buyer started, that's good. And suddenly gives me an MSU, takes the low, takes the high, takes this level, induce all of these guys, and take this guy out. What is that telling me? It's giving me an hint that we're about to start buying. So what happens when we come to the extreme? We start to buy. It will either give you an MSU into your zone or an MSU away from it. That is how price tells you it wants to reverse or it tells you it wants to change direction. Okay? It happens every time. See, every time you think about yourself selling from a level, always ask yourself, as price give you an MSU to induce guys away. Now you want to sell from here, right? Now this level is so vague that okay, you can decide to start selling from somewhere around here. Okay, let's say this level, this high. So see what happens. So price takes this level and then we form this low. See price takes it out, taps this level. Oh, it's time to start selling. Everybody's selling. They have their stop above this level. Now suddenly price takes this guy out, gives you that MSU, takes the proper low out. This is the true way, or this is the true place to start selling from. Start selling from here, your stop is here, you're induced, you're taking out. Then price broke, and then start giving MSU for continuation. Okay. Order flow, right? From what I mentioned, order flow, MSU tap, again, broke, MSU tap, continued. So the MSUs, they would give you a hint into what price is trying to do, right? When you see an MSU into a level, say hint into what price is trying to do. And it happens every time. No, I keep saying this. It happens every time, or it happens most of the time, especially when it looks so clear that, oh, this is what price is going to do. Now, another example, in this scenario, these two lows, they are completely mitigated. So the last low before the main low is this guy, right? This is the last low. So price comes, I remember last low before the main low is structural liquidity for continuation. So price comes, takes out the last low before the main low. And you see all these guys take the high, take the low, induce this guy, take the high, take the low. Now see what happens when we came into that structural liquidity, right? A lot of people will be thinking, oh, I want to start selling, time to sell. Why? We've taken the high, we're taking the low here, taking the high. So we should start selling. So you start selling all the way, right? Took this guy out, took this guy out. So you'll be saying, oh, okay, this is an MSU. What do you want to do when price comes to an MSU, to the extreme? You want to sell, right? You try to sell this, what happens? You are induced, price takes you out. Why? Price has given you an MSU into your continuation setup, your structural liquidity. What will happen? Price will only push higher. Price will only push higher. And this happens every time. Happens every time. Okay. Another example. Let's see a decent MSU right now. So price takes the low, new low, induce the high, right? Bearish market to take the low to induce the high. So we break. This is a decent MSU, right? This is what you want to be doing at the end of an MSU. Taps. Why? Because you've not gotten to your strong area. This is a strong area. This level is a strong level that price reacted from for this buy. Okay. So the next strong level, this zone price taps. What happens? We broke our MSU area. What happens? Give us MSU for more buys into this strong zone. Why? Is a zone that took liquidity and broke structure. Okay. So price taps right here and then continues to buy. Gives MSU for continuation over and over again. Then the buy continues. Took out all these guys. So your MSU can be used for continuations, it can be used for reversals, and it's most cheeky when it's time for price to reverse. It's the most cheeky, right? All right, let's see another example. So let's say price is reversing from somewhere far from here, this level. So see what happens, right? So price comes, we are this level, we are this level, okay? We had all the shenanigans, and then price takes this takes this low out, and then you're waiting for some magic. So price comes, takes structural liquidity, taps for continuation, right? Price comes, drives all the way down. So what's the new low? This is the new low right here. The price takes this low, takes this high. What do you want to do? Probably somewhere around here. You want to start selling, but what happens? Price takes you out. Boom. Comes to the extreme again, like before. Sold, took out the structural liquidity right here. and the true buy started from here. Okay, this happens every time, every time. Okay, now let's see another example. Okay, somewhere around here. See, everything just going to look choppy. It's going to look as though the market is against you. So let's see markets. Let's see sorry. Let's say price is reacting from somewhere around here. Now, it's easy for me to say somewhere around here because we have hindsight. Because sometimes when price tapped this level, a lot of people will say, "Oh, okay, it has taken liquidity. It has come to into this strong level, so we should start buying." But what happens? You get induced. Why? There's an MSU into that area. See, price takes the low, takes the high, give you an MSU, a hint that okay, something is likely going to happen within this zone, and then you are buying this, but you are lost. But price comes to the extreme again, like it always does, and then takes you out, boom, and then the true move starts. This is what price does every time. Okay, another example. Let's see more examples. Oh, which one is good now? Okay, let's go higher because there's a misconception that MSU only happens on lower time frame. That's not true. MSU is not bound to any time frame. Okay, MSU has nothing to do with M5, M1, M15. It has everything to do with the market. So you can see MSU on any time frame, any. For example, this is an MSU setup right here. This is a sell zone, right? What the price do? Price takes the low, this low takes the high, right? Taps into your MSU and then drops. And what happens next? Price comes to the extreme, taps this HNS level and then drops again. But this scenario, price did not drop completely. What happens next? See what happens. Price comes, let's see on the daily, it's clear on the daily, right? Comes, induce the last low before the main low, tap into the level, right? And then start to fly. Last low before the main low, induce, tap into our classic SnR level, and then we start to fly. Okay, we just have a few minutes more to finish this. All right, so that brings us to the next talk. So the next thing about liquidity inducement is imbalance. Now, what are imbalance? Imbalance are sort of just small pieces of candle in between the trend. They are usually after a very explosive move. For example, this candle right here is an imbalance. Okay, and usually a good area to trade from. You can see it's just weird in between. It's weird candles, right? See this one right here, right? Just weird small candles. See them. This is an imbalance. This candle is an imbalance. This candle is an imbalance candle. You see price taps and then start to sell. Okay. What else? We have them lots of them here, right? Imbalance, imbalance, imbalance. This candle is an imbalance. So what happens? Price taps and then we see the buy. Crazy buy, right? That happened today. Okay. So price more often than not after explosive move will trade from imbalance levels, and you can't trade them blindly. You can only trade them with storyline and then with the learning of structure. So when you want to take a trade, you're asking yourself, where is the strongest level that price is likely going to react from? It could be an imbalance level, it could be an interesting level, whatever level. For example, see this huge load of imbalance. And what happens? Price will come to the 50% of that level, which is proper mitigation for this trade, and then sold off from it. Okay. Imbalance. Now see this buy also from this imbalance. Okay. Imbalance. All right. Again, this buy, this is an imbalance candle. Okay. Price taps and then starts to buy. So more often than not, you see those levels, those candles like that. And for some reason, when you go to the lower time frame, these candles usually have engulfings in them. See them imbalance candle. Um, again, right here is an imbalance right here. This cheesy looking candle. The wicks will be touching both the candles before and after it. Usually, the wicks will touch the candles before and after it. Cheesy looking candles. All right, so you see them almost everywhere. Okay, see this imbalance candle. All right, all right. See this cheesy guy. Yeah, it's right here. See, stops, starts sell. Okay, cheesy guy right here. Cheesy guys, see them everywhere. So you can refine your entry based off, or for example, this entry can be refined to this level. Say for example, I'm more reason to refine that entry. There's an MSU within that area. Let me show you guys. You see this, the price takes the low, takes the high, tap into your level, you want to sell, right? See, takes the low, takes the high, takes the low, takes the high, and then find out true break of structure, and then price starts to push higher. Okay, more examples. So let's see more imbalance examples. All right, just cheesy candles. I have a whole slide on it, but no, time is running out, so I have to cover this today. Okay, so you see cheesy candles, you're just cheesy, yeah, cheesy guys, right? All around that area. Okay, so let's look for more. See them, see this guy, so cheesy. See the wick is touching, the wick is touching. Okay, cheesy candles. Okay, they're always all around. See, look at it, look at that candle one. Oh, see, okay, there's a cheesy candle right there, another one right here. Okay, they're always there. They're always on the chart. And yeah, it's always good when price retrace, they are usually the best for immediate retracement. You see, this cheesy candle, right? What happens? Price starts to go higher. And then later, came into another one, right? This other one, right? Taps, starts to go higher. Okay. Cheesy. Like, you don't have to be that cheesy, bro. I'm not even gonna lie. Now look at this one. This one. Okay. Can you see it? So what happens? Price stops, start to go. Okay. What else? Which other one can we see? There are a lot on the chart. There are a lot of them on the chart. See them before expansion, see them after pretty expansions. Okay. Which other ones? No, hiding somewhere. See this one, right? Right. Okay. Got broken. What happens? Flipped, and then price starts to go higher. Right? You're almost everywhere. Okay, now I think I have 5 more minutes. I know I've not taken questions before, but for